What up, what up, what up? It's TD from Structured Trader. So I'm doing something a little bit different today and starting a YouTube version of my market structure journal. I'll get into the exact reasons why and talk about a book that I read this week that sort of kind of flipped my opinion on how I want to be journaling and why I want to be doing more of it in public. I'll get into exactly what the book was and why it's changed my thinking. But for the time being, let's jump straight into the chart and kind of mark it up and see what happened. This is also coming off of part of the exercise here is that I totally screwed up on Tuesday and broke two basic fundamental rules. Again, going to get into that, but I've shut down trading for the week. So this is a chart markup of a session I did not trade. I just want to get into this on a daily basis anyway. I'm not trading for the rest of the week. Today's Thursday, not trading tomorrow. Back to it on Monday. Anyway, let's talk about the process of looking at this. I think we've got one relatively straightforward section, two pretty bananas sections, and a couple things worth studying. So without further ado, here we go. First off, we've popped in our pre-market high here and our pre-market low here, and then a first trouble area here in the dotted line. I'm going to go to the TradingView chart to show you exactly why I marked that area out here. Anyway, then at the open, we get a push up and then a mega push down, right? This little push up is a spring, and I wouldn't blame you if you wanted to go super aggressive and attack this level down here. It's too aggressive for me, but I get it, right? For me, this section here before we get too messy, I just messed this up. The most important thing to be looking at is this setup here. With the first minute bar, we've pushed all the way down. We have broken the first trouble area, closed below it, and then pulled back to it. To me, perfect entry, perfect setup. And obviously then we drive down. What's interesting is, although the entry is pretty straightforward here, the exit is not. And this is something that is worth studying. This little section here where we start to gas out is always, it's never easy on the NQ, usually because we get such big areas that we cover with the wicks. And I think it's important to set some sort of kind of hard and fast rule about how you want to handle your exits, especially if you're trading with one position and you're not splitting your contracts. Here for me, I typically would probably be out had I been trading this at any sign of an inability to close below a previous low, and I'd just be shook out. And if the price wanted to continue down, so be it. I would not be part of it. But I understand people who might want to even take a second shot here with this inside bar that then sort of sets up to attack lows. And again, you probably had a pretty decent trade that you could have profited with. However, had you been in this trade, I would genuinely ask you, would you be willing to cover here, or would you have the greedy eyes and be looking down at this level here? Kind of think that if you are trading the NQ, you're probably looking at the bigger shots. But if you're a true scalper, I get that maybe you're conservative enough to cover. Anyway, what I do think is good about this section to be looking at is whether something that I'd like to improve anyway, whether I could really get in and fade the breakout. It's not really my style usually. I could understand fading the breakout with the long a lot easier than the short. But if you were to get it, you'd have to get it really spot on. Reason is, look at how this bar acts. The bar after the fail is often a very, very difficult thing to handle on the NQ. It looks very easy on the chart, but if you were to kind of zoom in, you would see that this bar has put everybody in the red at some point. It's kind of screwed up the shorts, it's screwed up the longs, both directions, and then it's kind of settled in no man's land. So not an easy sequence to trade by any means if you were trying to get into the market. If you're trying to cover, pretty easy. You should either be out here or be out here. Anyway, then we come back up, and we're going to hit a section that I think is absolutely bananas. And let me get into this here, keep the chart semi-clean here. And that banana section is this guy here. Let's call this X. So in X, what we have is essentially a perfect pullback, a really nice looking pullback. You've had this big push down, you failed at lows, you've had a nice pullback up to something around, it's not a 50%, but it's a 68% pullback maybe. And then what do we have? We have a nice little pin bar there. This is also at a volatility expansion level. And then we even get some action going south. But then we get this mega trap right here. This bar is bananas. And then pull it back up, back down. Second opportunity, right? Nope. Second trap and pop. To me, this kind of a section is what is the killer when it comes to NQ. I think that this is the type of chop zone that it's not just a chop zone, though. It's really a trap zone. And I think it really gets people. I've learned to kind of stay away from these. Once we have some initial energy really push back, I've come to a pretty good specific rule, I think, here that I'm going to start, that I've actually put in writing. I've never really put this in writing before, and I think it's worth looking at. And that is that once we're done with an opening drive, right, like this action here, I think that I'm going to stop looking at the 1 minute unless we start coming back to preset ideas. So a preset idea would be the previous high, the pre-market high and pre-market low, and taking trades whether it's a pullback or a fail. But anything post drive, between the opening drive and the pre-market high and low, I'm going to avoid completely by shifting over to a 5-minute or 15-minute chart and avoiding the 1 minute completely here. No 1 minute. And it's mainly because of zones like this. It's honestly, it's beautiful. It's something that is going to get everybody every time. I don't care who you are. This is probably going to at least entice you to take at least one loss in here, if not two. Anyway, so as we come out of X, we get into a pretty test and fail here, and then another one here. We have one more zone worth looking at here, though. And let's call this guy Y. The real thing about Y is this bar down here, and what it is actually a third bear trap. And it is a doozy. Imagine coming down with this much energy and then putting in a bit of a pause here, and instead of flipping, you've gone and put in a very strong bearish bar, breaking this low. You think you're in the clear. Honestly, if I was live with this trade, I would be looking 100% down to here. And instead, we don't. We stall and then we float. To me, at this point, I don't know about you, I would be completely out of my seat, going to do something else. My day's over. And I probably would have ended up missing this guy. Just because at this point, I would consider myself out of sync with the market. But anyway, I think that covers this. We also have a very nice setup down here with the fail at the pre-market low, and then a huge drive up that happens afterwards. If you want to see this on TradingView, let's see, where is it? Very different looking day. Here we go. So as you can see, here's the low that we were looking at down here, and then the day just goes pop. So let me go back to this for a second and explain why I think that this book, The Four Tendencies, has got me thinking a little bit differently. I'm doing this on YouTube because I have found myself to fit perfectly into this category called obliger, where it's very easy to meet outer expectations, but I resist inner expectations strongly. The way that this manifests itself in trading is that I find it a lot easier to handle other people's money, treat other people's money professionally, and I tend to be a little bit more lax and lazy with my own account and my own rules. I think that's interesting. The way to sort of hack around it and to get past it for yourself, if you're that type, is to create false external accountability. For me, that means a YouTube channel. And this is what I'm attempting to do here. So I hope that was of some benefit to somebody. I'm going to mark up this chart a little bit more neatly and then save it in my file. And then I can use Procreate as a visual kind of journal database instead of going back to carrying a heavy binder around like it was the mid-90s. So, signing off. See you later.